and welcome to Bloxlive TV. It's Wednesday, February the 6th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Well, in a matter of minutes, the total market capitalization tanked by $2 billion during the early trading hours on this Wednesday. As a result, the market valuation stands less than $1 billion above the year-to-date low of $111 billion. The 15-minute chart of the cryptocurrency index CCI 30 shows the massive red candle, which took the value of the index below the 1,900-point level. Otherwise, the week has been really calm, and the 30-day Bitcoin volatility index plummeted to 2.4% yesterday. This keeps the long-term downward trend intact. The most recent decline has had no influence on the 24-hour traded volume indicator, which remains at a relatively low level of close to $16.5 billion. The Bitcoin dominance indicator was bumped higher by the drop, and it currently stands at approximately 53.7%. The battle for the fifth position by market cap continues, and Tether takes over as Bitcoin Cash, as the rest of the top 5 digital assets all trade in the red. Ether is extremely close to testing the key 100 support level. The Coin 360 heat map shows us the scale of the bearish sentiment, as most of the assets are in the red. According to the token spread website, the XMO exchange has the biggest buy and sell side difference of nearly 0.5%. The BitMEX and XMO exchanges post the biggest intermarket spread of more than 3%. Well, today we'll take a look at some of the characteristics of the Neem blockchain project. The platform was built from scratch in 2015 to achieve superior scalability and speed. Most altcoins at the time were either Bitcoin forks limited by its technology. The target audience for this project is enterprises, and the native token of the platform is XEM. There was a major hack in early 2018 when more than 520 million XEM tokens were stolen from the Japanese cryptocurrency exchange Coincheck. Unlike Ethereum that we covered yesterday, Neem decided not to do a hard fork to recover these stolen funds. The project instead used fund tagging to mark all of the accounts that received the assets that were looted. The project stopped tracing the funds after a couple of months as enough data was gathered for law enforcement authorities. Well, the asset spiked above the $2 level in early 2018, but it currently trades at just slightly more than 3 cents. The past month has been extremely bearish for this token, as the Neem Foundation recently revealed they have 1 month left in funding. However, a couple of days ago, they announced some staff would be made redundant and a change of focus to a product-based organization. Well, now we'll move on to the next segment where we'll review the performance of the digital assets based on their category, as reported by the Messari website. The infrastructure group shows the top decline today, and it's down by more than 3%. Just 3 of the infrastructure assets are trading up in a mostly bearish day. The media and entertainment category is more than 2% in the red, as the bullish theta token provided some support on this bearish Wednesday. The financial sector posts an overall decline of more than 2.4%, despite a strong gain for Binance Coin that's up by nearly 20%. The currency category is down by almost 3%, as the day is generally red for this cryptocurrency. And lastly, the services section shows a decline of close to 3%. Now, just 3 of the top nearly 40 subcategories are in the green, and these are the reward system, centralized exchange platforms, and artificial intelligence. Well, this is where the cryptocurrency categories stand in terms of performance so far on this Wednesday. We'll now focus on the biggest moves among the top 100 cryptocurrencies to identify the top winners and the biggest losers. Well, the bearish mood has brought some change to the composition of the top assets by total valuation. The Binance Coin bucks the generally bearish trend with a surge of nearly 18%. This puts the BNB token among the top 10 digital assets by market capitalization. The crypto winter has not stopped Binance, as it's been working on a number of new projects. The exchange recently posted detailed research reports on its Fetch AI, the next project for the Launchpad. The CEO and founder of Binance, Changpeng Zhao, tweeted today that CoinMarketCap has updated the circulating supply of BNB, where this could also be a contributor for the moving up in the rankings. The Theta token continues its recent bullish performance. Another double-digit increase puts the asset above the 7-cent level. The Remain token has recovered some of the losses that were posted in a sharp decline on Monday. The Versatanium token has returned to the list of the top 100 assets with an increase of more than 3%. While the Fatcom coin has gained more than 3% to return back above the $6 level. Now more than 85% of the top 100 digital assets are trading in the red today. The B2G Coin, which puzzled analysts yesterday with a surge, has given up some of the gains. The pullback nearly takes the asset out of the top 100 list. The PundiX token remains to be one of the most volatile cryptocurrencies, and it's down by double digits after gaining ground yesterday. The bearish performance continues for XEM coin. It's given up nearly 50% over the past month. This comes as Neem Foundation announced their financial issues. The ARK coin has moved sharply lower in a couple of waves during the past 7 days, and a decline of more than 8% puts the price at less than 35 cents. Komodo is a dangerous species of lizard in Indonesia, but is also a platform for blockchain ecosystems, while its coin has dropped after posting some gains earlier in the week. These were the top 24-hour moves during the European morning trading session on this Wednesday. We'll now join our expert Jason Fernandes, COO and co-founder of A Token, and Kevin Murck, CEO and founder of Coinmetro. So both of you, thank you so much for joining me on the line today.
Thank you for having me.
It's a pleasure to have you back on Crypto Now live show. Now we're going to start off with cryptocurrency markets remaining trading near the year-to-date low. So Kevin, I'll start with you. Is this a dangerous territory when we see the drop could accelerate if the support level is breached?
It really depends on how you analyze the market. I think from a technical perspective, we're seeing consolidation. So consolidation happens either with accumulation, distribution. Accumulation happens when buyers are coming to the market and they're buying the available supply. You start to see consolidation, and then eventually you see a rise upwards. Distribution happens on the opposite effect. Distribution happens on a high, and you start to see sellers come into the market. So from looking at the market now, I think that technically speaking, if you're a pure technical trader, you may be looking at further lows inside of what we call a rounding bottom. Which means that while we are consolidating, there may still need to be a little bit of push towards the south to pick up more buying interest. But generally speaking, I think we're in a range bottom at this point. So we may have not hit the ultimate bottom, but we're definitely within a bottom end range at this point. So I wouldn't necessarily say that's a bad thing. But buyers that come into the market should be aware, should set their risk parameters adequately so that if we do see an extension of this bottom, they don't see stop outs and get locked out of the market.
Great. And now, Jason, I'll ask the same question to you. Is there a risk that the drop could accelerate if the support level is breached?
Yeah, I think to answer your question, I do think we are in dangerous territory. If you look at Ethereum, for example, even if you ignore all the problems with Bitcoin, the long-term trend, even with Ethereum, is down, and it's lost a lot of money for investors this year. And if you look at the charts, after every rise and after every fall, the digital currency has a tendency to consolidate in a range. But if you look at the chart in 2018, the ranges have all resolved to the downside. So I think that's really troubling. And I think that over time, we should really hope to see this see this move upwards. And I think that'll only start happening once we see better regulations coming in and the SEC starts getting on board. But I think overall, that's the problem is that the trend with Ethereum is what we see overall in the crypto market in general. So whenever there's a rise and a fall, it tends to consolidate downward, and I think that's really troubling. And I think that it's a dangerous market at this point. And the drop could accelerate if the support level is breached.
Okay, so some similar opinions there. Now, various crypto defied support levels, seeking them to drop to new lows. What is driving the market down? Is it bad sentiment? Is it bad news, such as hacks and thefts related to crypto exchanges? Or is it a combination of all of these factors? Kevin, we'll start with you.
I say this a lot, and I guess I'll repeat myself here on this question, in that the market is still an immature market. So most mature markets, so let's talk about equities markets, for example, have some type of correlation between the underlying asset and the actual asset value. Now we're getting to that point. You're starting to see, especially when you talk about different sectors at the beginning of the show, we're starting to see these sectors start to have some correlation to the same sector outside of the crypto sphere, like AI, for example, emerging tech, et cetera, that these things are showing bullish signs while everything else is bearish. But there still is no major correlation. So when you have an immature market, low liquidity market, an immature market combined with low liquidity, basically what happens is you see more volatility. So with that volatility, I would say that any type of sentiment, especially, this exchange getting, or the exchange founder dying, et cetera, that's in the news in the last couple of days, these things can definitely have an effect because they affect sentiment. And right now, while we do have institutional money starting to come into this space, a lot of it comes through OTC or dark pools. It doesn't necessarily touch the outward lying market. So what happens is that retail volume tends to push the sentiment, and retail traders are much more anxious than your institutional traders. So when they see bad news, they tend to run. I do think it has a lot to do with sentiment. At the same time, it could have a bit of there could be a bit of technicals in there. People are looking for technical signs. Technical traders are looking for technical signs that we're coming out of this bearish trend. And I don't think they're seeing, let's say, those signs yet, so that they're holding back. And then you have the retail sentiment that's just kind of keeping us in this consolidation phase.
Okay, fantastic. Thank you, Kevin. Now, Jason, I'm going to turn to you because the B2G coin jumped sharply yesterday, around 250%. It's given up a large portion of those gains today. What does this tell us about the sharp move higher?
So I think it was a massive bump. The numbers that we were seeing with that anyway, something like 280% in 24 hours, and that's just with a trading volume of 2.77 million. So and now it is market cap surpassing 54 million. At least yesterday, recently, it was ranked it was $63 by market cap. And I think for a currency listed on just X-Rates, DigiFinex, and some other minor exchanges, it's quite weird that would be the case. But also you have to look at the fact that this was originally promoted by Steven Seagal. And whenever you have these ICOs that are promoted by some sort of celebrity like Steven Seagal or 50 Cent or something, when these people are not really crypto experts, you really have to wonder whether they don't have something more substantial. And I think even in New Jersey, where the ICO culminated, the New Jersey Bureau of Securities cracked down and prevented their advertising. And I think a lot of people are saying, a lot of rumors are that the company is linked to Dragon Mining. And if you look at Dragon Mining, it was your typical scam where it was a sort of a cloud mining scam, which we see a lot nowadays. And I think if more specifically, I think the sharp rise is reminiscent to what happened with Vixanium and FireLotto, where we have two other crypto projects without a clear and concise use case, but are still massively increasing. So I think it was just a pump, and I think we're going to see it go even much lower in the future.
Well, thank you for that, Jason. Now, Kevin, I'll turn our attention back to you. So Binance Coin is the top performer so far today. So this, on the other hand, appears to be a project with some strong fundamentals. So CZ tweeted thanks to CoinMarketCap for adjusting circulating supply today. He also noted how difficult it is to correctly calculate rankings. Is this one of the areas where we'll see some improvement over the coming years?
For sure. As the market matures over time, we're going to get more access to data. There's going to be probably standardized data protocols. So in most other financial markets, you use something called FIX for the most part. So Financial Information Exchange. Hopefully, we will create something better than FIX. But there will be some type of standardization at some point, which will mean we will have more access. Everyone will have more access to different types of APIs, to data sets. More data means that we'll be able to parse more information. More information means that we'll have more clarity on what's going on in the market. And we'll have what's called basically price discovery. Right now, price discovery around the market is rather non-existent. And it's a problem because you can't really have a mature market without having some type of price discovery mechanism so that all players know more or less how different types of assets are pricing. So yes, over time for sure, as this market matures, the more data we have, the more the market matures, the better we'll be able to see that data, parse that data, and actually take that data and create better use cases for that data, which CoinMarketCap is definitely an example of that.
Absolutely. And Jason, I'm going to ask the same question to you there, because CZ has also noted how difficult it is to correctly calculate rankings. So as you do represent a token, is this one of the areas where we'll see some improvement over the coming years? Is that something that you're expecting?
Yeah, I think as CoinMarketCap is able to more accurately give information on the total circulating supply and transaction history and such, these are sort of the things that are going to, the transparency in the industry is going to sort of see things move forward. But Binance is, they just debuted their new Launchpad project, Fetch AI, and there's been successful rounds of public-private token sale of Fetch in June last year, where some 24,000 ETH was raised. So I think, and also a public endorsement from the project from the world's top crypto exchange does seem to be driving momentum for Fetch. And I think overall, the fact that Binance has chosen Fetch to be one of its Launchpad projects shows that it's really good at picking winners. So yeah, I think over time we're going to see better statistics that'll lead to better numbers for better statistics on CoinMarketCap, and that will then lead to more intelligent investment decisions by investors that are looking at this data.
Absolutely. And Jason, I'm going to stick with you now, because something that we have focused on throughout this week is Quadriga CX and the exchange crisis. Does this remain a significant factor for the markets, or has it already been priced in your opinion?
So I think it is a significant factor, only in as much as there's a general negative sentiment towards crypto. And the stuff that's going on with Quadriga CX does not help things, because it basically shows that exchanges have really not learned anything from all the scams and have really put in no redundancies for this sort of situation, which is surprising. I think the average person knows that most businesses will share their social media passwords with at least a few people, just in case something were to happen. And I think the fact that this is not the case here, I think it sort of gives people pause in the crypto industry in general, but also the thought that perhaps a lot of the rumors that maybe he may have faked his death because he filed his will 12 days before his death. Those rumors also could have certainly not helped things. And I think that has it been priced in? I mean, I think that many things have been more than priced, and I think at this point, the positive information in the market, we don't really see positive information that comes out. We don't really see that reflected in the market at this point, anyways.
Sure. And Kevin, I'm going to turn to you because I know we briefly touched on it yesterday with Quadriga CX. In your opinion, what does this say for the reputation of the cryptocurrency and the exchange market?
I think it's just a further call that regulation and some type of stabilized frameworks are needed in order to structure this market a little better than what is structured now. Again, we're in all aspects, we're still in a very immature market. And while you may be on one side of the fence or the other when it comes to regulation, you may be for it, you may be against it. At the end of the day, one of the only ways that we actually push this market forward, and I mean in all aspects, from mass adoption to just actually getting to the point where we have a decent amount of tradable assets, not only from the crypto space, but also tokenizing assets from outside the crypto space, is through some type of framework, some type of regulation, whether that's self-regulation, whether that's regulation through some type of regulatory body that's controlled by the government, but some type of regulation and oversight is needed here. I mean, the fact that you would never see the keys to the NASDAQ safe being in one guy's pocket when he plummeted to his death, somewhere, I don't know, in the Pacific Ocean, right? So, these type of things, these type of protocols, SOPs, standard operating procedures, right, should be forced upon financial companies. They're dealing with other people's money. So I do think that while it's not the best sentiment, this has happened many times before. It's probably not going to be the last time. So I don't think it has such a prevailing effect on the market. Obviously, initially, in the first few days, weeks, it can have an effect. Over time, though, that effect kind of gets washed out. It gets priced in, and you don't really notice it as much. But there definitely needs to be a change in how the oversight of this market is basically controlled, because at this time, these things can continue to happen, and it's definitely not good for the market in the long run.
And Kevin, there are so many conflicting predictions out there. Who can we believe? Some of the most credible forecasts linked to a crypto market recovery, to better technology for off and on-ramp cryptocurrencies. I would love to get your insights, and do you agree on this?
I think there's a lot of things that need to happen, right? This isn't just in the crypto market. Every new market that comes out, every new asset class that emerges, these things always happen. The same things are needed, right? Stability, you need liquidity, you need et cetera, et cetera. But in crypto, you have things that come in from outside that don't usually come in with different other types of assets classes. You mentioned, for one, like use cases and things like that. At the end of the day, we need, markets are made of bubbles. There's always a bubble in every market, right? Where you get in a bubble or you get out of a bubble. There's always some bubble forming somewhere, whether it's real estate, whether it's commodities, whether it's crypto, et cetera. There are always bubbles in markets. So we've experienced probably 5 or 6, let's say, market phases or cycles or bubbles. In Bitcoin, for example, up to this point, we're going to experience many more. What's the catalyst for the next bubble? I think regulation is going to be a big catalyst, because it's going to allow larger players to come into the market, and it's going to give them a bit of stability that they need to be able to come into the market. It's going to allow them to tokenize assets, which will expand the amount of market cap that we have outside of Bitcoin, Ethereum, et cetera, and the major players. And use cases. We need to define really specific use cases and really put these things to work and show basically the world that DLT and distributed ledger technology and tokenization and all these things are actually have real world use cases. Once we find the next, the ICO use case definitely was a major cause of the bubble in 2017, right? For better or for worse, that's how we got here. Now we need to create, longer lasting use cases that can actually propel us into the next bull run, basically.
Great. And now, Jason, I'm going to turn to you, because Japanese financial giant SBI has announced the launch of its SBI VC Trade crypto exchange that could potentially bring 23 million of its traditional investors into digital assets. Is this announcement going to have an impact on the market in any way?
I think I hope so, but it really seems like I was mentioning earlier that a lot of the positive news that comes into this market doesn't seem to be moving market sentiment at all. Whereas when there's negative news, it tends to move the market down. But if you look at the fact that SBI VC Trade just had a partnership with Ripple, that should help things. But we hadn't really seen much of a bump with that announcement. So I'm not sure it will make much of a difference, but it ought to.
Great. And Jason, I'm going to stay with you, because some experts do say the market will see a reversal in 2020. Now, others say it could take even longer than that, perhaps even a decade. How do you view these very opposing predictions, and do you think they have any validity?
Right. So, I mean, people that are looking at this market it's really confusing, because you have Jess Schumacher, founder of BCG Digital, recently telling CNBC at Davos that Bitcoin will go to zero. And in another interview, you have Thomas Lee of Fundstrat saying that Bitcoin would go to 25,000, which he called its fair value. And then you see analysts at JP Morgan, meanwhile, saying that it could go down to 2,400 and then eventually forward to 1,260. So those sort of differing opinions can confuse new investors looking to enter the market. But I think that traders should focus on fundamental developments in the crypto space. So, for example, the increase on ramps and the increase off ramps for crypto. So, for example, the fact that there are so many new services, like particularly Binance, that is allowing you to buy crypto using credit card, and then you have other services which are crypto debit cards, allowing people to basically spend their crypto using debit card. This sort of on ramp, off ramp situation increases the liquidity and makes it a much more attractive investment for a lot of people. So I think these are sort of the things that you should be looking at. But overall, if you look at the correlation between Bitcoin trading and gold, it's reached as high as 0.84, and it's traded at a 0.077 correlation to the Chicago Board of Options volatility index. So I think as the market matures, it will carve out a niche for itself. But the cryptocurrencies are currently in a bottoming out process, and hopefully we'll see that in the next few weeks, and it will start to go up again.
Great. And now, Kevin, just quickly, there are some speaking of the 2013 to 2015 crypto winter and how that would indicate the market is approaching recovery. While others compare this to the behavior of gold, I'd love to get your insight on what is an excellent way to look at the market cycles.
I think the best way to look at a market cycle is look at the asset, the same asset that you're evaluating, right? In more mature markets, you can try to find correlating factors. You can find correlating factors, for example, in FX between commodity currencies like the Australian dollar and the Japanese yen, and commodities like oil and gold. Those correlations have been around for quite some time because they power those two economies, export economies for the most part. But when it comes to crypto, it's a very new market. People can speculate on what correlations it may have. I think most of those speculations are a bit ridiculous, to be honest. So at the end of the day, if you want to look from a technical standpoint on where a market's going to go, just look at that market. So we've had about six different cycles throughout Bitcoin's life cycle so far. I talked a bit about this yesterday when I was on the show. I can come back with some actual data tomorrow, but I remember, if I remember correctly, the peak to low was about 92 to 94%, and that was 2014-15, I think. So we're still not there, though other peaks were about 86%, which we've already surpassed, and now are consolidating around that same level. So there is a chance, if you're a pure technician, that you may believe that Bitcoin will fall below 2K. I think that the low is somewhere like 12 to 1300 USD, would put us at the absolute peak to trough low that we've seen maybe twice in Bitcoin's history. If you're not a pure technician and you're just looking at fundamentals, I would say that we've seen some bad fundamentals coming out over the last, let's say, few weeks, and it hasn't really pushed that much down on the assets. You know, that they've basically been in the same range, which again looks like consolidation to me. So I think though we may see some lower ranges, I think we probably will start to see some uptick at some point here in 2019. But again, it's I wouldn't look to correlate the crypto markets with any external markets yet. They're just not mature enough yet to really have any outside correlation.
Great. Well, thank you so much, Kevin and Jason, for joining us on the line. We look forward to catching up with you all again tomorrow. Thank you very much.
Thank you.
Now, we do have a last-minute update from our editorial staff. Tether and Binance Coin are the top two digital 10 assets trading in the green. BNB stands above the $8 level with a double-digit gain. The day has shifted towards the bearish side for Holo Token, which is now the top decliner with a double-digit gain. Well, that's all for this Wednesday's Crypto Now live show. We thank Kevin Murck and Jason Fernandes for their expert analysis. We thank you, the audience, for joining us, and invite you all to accompany us every weekday at the same time.